Good evening. It's my pleasure to welcome all of you to a discussion on our performance for this quarter ended June 30th, 2018. Our business presentation is, of course, available on the website. You can access it while we talk you through our performance for this quarter. So first, let me talk a little bit about the economy and industry in this quarter. So quarter 1, 2019, if you look at the environment, it has changed quite significantly compared to FY 2018, which was certainly a very good year for financial markets. As we entered the first quarter of this financial year, the macroeconomic environment turned cautious with concerns arising from rising crude oil prices, falling rupee, global geopolitical uncertainty, strengthening of the U.S. interest rate, Fed rate hikes, fears of trade wars. These factors impacted the flows into financial markets and the performance of equity markets in general, and the mid-cap, small-cap space in particular. FIs were net sellers in the first quarter of this year with a net outflow of over 18,000 crores, compensated by strong inflow from domestic institutional investors of over 70,000 crores. In the first quarter, again, the average daily market turnover, ex-proprietary volume, was up by 50% compared to the first quarter of last year. Within this, it's very pertinent to note that the mix of ADTO actually shifted towards derivatives, and within equity, it also moved towards non-delivery trades as active traders continued to participate in the market much more in comparison to retail investors. The contribution of derivative volumes in overall volumes was 92.8% and 94.7% respectively in the first quarters of the last year and this year. This illustrates the point that we were making earlier. Mutual funds had assets under management of 22.9 trillion rupees as on 30th of June 2018, which was up by 21% on a year-on-year basis from 19 trillion rupees as on June 30th, 2017. In the last 6 months, the monthly SIP inflows have, however, remained stable and have been in the range of 65 billion to 70 billion rupees, even in volatile market conditions. Equity capital market deal activity also slowed down in the first quarter of 2019 in terms of volume and value of deals. Indian companies raised equity of 124 billion in the first quarter of this year through IPOs, InvITs, and other ECM access, compared to 416 billion in quarter 1 of 2019. So that's really a decrease of 70% year-on-year. We continue our focus, however, in these muted market conditions, on using our market leadership to leverage our technology edge, our retail customer franchise, and that is really what we have focused on in the course of this quarter. So a few financial highlights which you would have seen already. Our company has registered a growth in revenues for the first quarter in this year, with consolidated revenue growing up by about 9% from 4,014 million to 4,359 million, and profit after tax going up by 13% from 1,184 million to 1,338 million. We were also able to contain our costs. Our total cost was 2,333 million rupees in the first quarter of this year, a growth of around 5% from 2,215 million in quarter 1 FY 2018. Our cost-to-income ratio, therefore, was 54% in quarter 1 of this year as compared to 55% same quarter last year. Our return on net worth annualized is around 59%. Some business highlights that we'd like to point out. So for this quarter, our company registered revenue growth led primarily by non-brokerage revenues going up by 14% year-on-year, and brokerage and related revenues going up by 6% year-on-year in the context of the current muted markets. Within non-brokerage revenues, our distribution and corporate finance revenues grew by 17% and 19% YOY respectively. Also, one of the things we focused on in this quarter was some of the lead indicators for our business, which is essentially the number of clients we acquire. And we were able to add 1.1 lakh clients, which was around a 6% growth over same quarter last year. Within the overall number of customers acquired, the quality of sourcing has improved in terms of number of customers, bringing in an initial margin deposit. Moving to some comments about each of our businesses. First, the broking business. In our broking business, we continue to gain market share, which improved from 8.8% in the first quarter last year to 9.2% in the first quarter FY19. The ADTO ex prop was up by 57% compared to market growth of 50% YOY. This was led by growth in the average daily derivative volumes, which were up 60% year-on-year compared to market growth of 53% on a year-on-year basis. The average daily equity volume was up by 14% year-on-year compared to a market growth of 10%. The company outperformed the market in terms of volumes in both equity and derivative segments. In line with our strategy to focus on customers and on activation, we were able to grow our active clients on NSE by 24% from 6.5 lakh clients in Q1 FY18 to 8.1 lakh clients in Q1 FY19. We have been consistently able to maintain this leadership in terms of NSE active clients. Total brokerage revenue excluding interest income, which contributed to 53% of our revenues in FY19, Q1, increased marginally against same quarter last year from 2,268 million to 2,298 million, with retail forming 88% of total revenues. Brokerage revenue from retail clients stayed almost flat at 2,024 million in Q1 19 compared to 2,044 million in Q1 18. This was mainly on account of a decrease in equity delivery volumes and gradual shift of mix towards derivatives in line with the market. Retail investors' muted participation resulted in decline in retail delivery volumes during the quarter. Our experience is that in a volatile market environment, especially in the current scenario, where small cap and mid cap scripts have underperformed and nifty returns have also been concentrated in few scripts, cash equity transactions and within that, delivery transactions reduce, whereas derivatives and intraday transactions go up. The yields within the three distinct segments of cash equity delivery, cash equity intraday, and derivatives have remained largely stable. Interest income from our brokerage business has grown by 34% from 338 million in Q1 18 to 453 million in Q1 19, primarily on account of growth in our margin funding book and margin funds deployed with exchanges. The margin funding book is stable despite current market environment and will, of course, look to scale up with improved market conditions. Brokerage revenue from institutional clients was 274 million rupees in Q1 19, a growth of 22% from 224 million in Q1 18. Our institutional broking business has dedicated sales teams across India, Asia Pacific, and the United States. We have executed several block deals during the quarter, which demonstrates our strong execution capabilities. We also have a 40-member strong institutional research team covering 240-plus stocks across sectors, supplementing the growth of our institutional broking business. Turning to the distribution part of our business, revenue here grew at 17% year-on-year from 993 million in Q1 18 to 1,164 million in Q1 19, and contribution in total revenues has increased to 27% from 25% YOY. We were the second largest non-bank mutual fund distributor by revenues in the country for the fiscal 2018. Structurally, our AUM comprises majority contribution from equity, which have higher yields. Our mutual fund average AUM was 348 billion rupees in Q1 FY19, a growth of 31% from 266 billion rupees in Q1 18, compared to the market AUM average growth of 20% on a year-on-year basis. Our mutual fund revenue was 773 million in Q1 19, a growth of 28% from 606 million in Q1 18. Our mutual fund revenue contribution in total revenue increased to 18% from 15% year-on-year. Our strategy of focusing on SIPs as a means to have a continuing annuity income stream has resulted in a growing count of mutual fund SIPs and stable inflows into SIPs compared to last year. The total number of unique SIPs triggered in the trailing 12 months increased by 55% year-on-year from 0.7 million as of Q1 18 to 1.1 million as of Q1 19. In our life insurance business, the total premium garnered grew by 6% year-on-year. Our life insurance revenue was 87 million rupees in this quarter, a growth of 30% from 67 million rupees in Q1 18. Turning to investment banking, the revenue from this segment was 323 million rupees in Q1 19, a growth of 19% from 272 million rupees in Q1 18. The major transactions handled by the company in this quarter included the Ind Infrawit private placement, ICICI Prudential Life Insurance offer for sale, as well as advisory transactions for Federal Bank and for KIMS Hospitals. Our diversification efforts towards scaling up of our non-brokerage businesses have helped in reducing volatility. Our contribution from non-brokerage business increased from 35% in Q1 18 to 37% in Q1 19. I will therefore summarize to say that we are well positioned to gain from the transformational changes unfolding in financial savings in India and benefiting from the change in digitization landscape in India as well. We believe there is significant headroom available to grow all our businesses, and we remain focused on our key strategic priorities, leveraging our strengths in tapping opportunities across our businesses as we have done in this quarter. Thank you. We are now open for any questions that you may have.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Narottam Garg from Chanakya Wealth Creation. Please go ahead.
Yeah, hi. Good evening. Thanks for this opportunity. Shilpa, could you share some data regarding what has been the kind of churn or the kind of persistency that you have seen in your SIP book? If you could share some data on that. Thank you.
Yeah, so at this point, while we do not have specific data in terms of numbers, I think by its very nature, in terms of, how the product works, I would say that, we have continued to see our SIPs grow, both in terms of number of SIPs as well as, quantum. And that is really reflected in the numbers that, we have kind of put out just now, which if I can just pick up and share again, is the fact that, we are currently at 1.1 million SIPs at this point in time, which is frankly growth even over the last quarter of this year.
So, what was the opening SIP count number for the first quarter, and how many SIP accounts have you added in this quarter? If you could give that data.
Yeah, sure. So, I'll give you both numbers. So, like I said, for quarter 118, we were at 0.7 million, which has seen a 55% growth to 1.1 million now.
Okay.
End of quarter 418, we were at 1 million SIPs. Which, if you look at it, even quarter on quarter, is a 7% growth. And, which is why when we say that in terms of even AUM, while markets as a whole have actually seen, 38% decline in terms of MF gross purchases, frankly, we would have done better than that.
Sure. And Shilpa, also if you could share from 1Q18 to 1Q19, how many total SIP accounts would you have added, gross number?
Sorry, between when to when?
From 1Q18 to 1Q19, the gross addition to the SIP count?
Yeah, so that's the number I thought I just shared. So we had in quarter 1 18.7 million, which currently we have 1.1.
Okay, that is the addition number.
No, it is the, in a sense, what would I say, the net number. So it's not the gross addition number. I would say, technically it's the net addition number.
Okay. Thank you, Shilpa, and all the best.
Yeah, thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Mitesh Jain from Investec. Please go ahead.
Thanks for the opportunity. So on market share, we are seeing on an overall basis the market share have been going up steadily for last 3-4 years. How is the segment-wise market share, especially in the cash delivery and cash intraday? How your market share have moved in last 2-3 years and specifically in this quarter?
Yeah, so see, broadly, our focus would be to while, of course, we report the blended market share, our focus is to look at, the market share individually on equity and derivative basis. And to that extent, I would say, broadly over quarter 118, we would have actually seen increase in market share on both equity as well as, derivatives. Because naturally, as a, broker which caters to all kinds of customers, our effort is not only to, kind of work with the active set who, do derivatives and intraday equity, but our effort is also to work with people who are not so active but who actually, take delivery of whatever they buy. So our effort is really, to grow market share in both. And over quarter 1 of last year, we would have done that.
And in terms of concentration of your brokerage revenue, is it still the same that 5% of your clients account for almost 60% of revenue, or is there any change there? And how is the selection between the remaining 95% of the client base?
So, let me explain how we think about this. So, clearly, like in most financial services, agency houses, this kind of concentration of customers, and naturally that is there with us. Now, in terms of, what are we doing going forward, while this number will not change dramatically quarter on quarter, clearly the efforts of the company, which, we've articulated earlier in terms of increasing cross-sell, in terms of, very focused, acquisition and activation, I think over the period of a few quarters is when you will see, progress in terms of substantial movement in that number.
And lastly, on capital allocation, you have around 1,500 crores of cash sitting on your balance sheet. And I think the company is generating almost 100 crore plus cash on a quarterly basis. How one should think about cash or capital allocation specifically related to buybacks and dividends?
Yeah, so see, you're right that as a company we are very conscious that, our philosophy is that of a full spectrum financial services agency business. And by the very nature of whom we are, which is an agency business, we don't need capital, and as management we don't think we need to sit on cash that, stays in the company. How we've been handling it so far is really in terms of dividend. You would have observed that, we have 40 to 60%, that we pay out, and that is not including dividend distribution tax. So when you kind of, add that, you'll see we pretty much pay out almost 3/4 of what we earn every year. So to that extent, I think while we don't have a policy that the board has put in place in terms of this, the fact is we are conscious that, we are a low capital, high ROE, a cash generating business, and we like to, in a sense, give back through dividends or otherwise the cash that we have.
Any plans for buyback, given the share price has corrected quite a bit?
So at this point, there's nothing concrete. But from time to time, one does evaluate what are the various uses of cash and what are, the most efficient uses of cash that one can have in relation to investors. So naturally, that's something which, we kind of look at, fairly actively.
And Mitesh, just one clarification. The 15 billion number that you're seeing in the balance sheet as cash and cash equivalent primarily is on account of fixed deposits which are placed with exchanges for margin.
Yes, sure.
Which we earn interest income.
Yeah. Thanks. Thanks, Shilpa. Thanks.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Pranav Bhavsar from ASA Capital. Please go ahead.
Yeah, hello ma'am. I wanted to know, do you foresee any impact from MiFID II regulations for your institutional business in the next year or so?
So, see, MiFID is having an impact, across, all research and institutional businesses. Mm-hmm. However, we think the way we are organized and, being a kind of large, India player, we think there are various ways in which we can still continue to grow in spite of MiFID. And the fact of the matter is in the last, few years, we have actually invested in both research capabilities, filling in gaps that we had. We are also invested in, resources which are focused outwards towards the FI community. And I think the combination of, A, research, B, the reach through our salespeople, and C, I would say the increasing, liquidity we are able to bring to investors through block deals and other such transactions. I think, this combination of all three forces and the ecosystem required is something we are ramping up. And we feel in spite of, MiFID, we would be able to grow. And I think if you look at the financials for this year, our institutional business quarter on quarter has actually grown around 22% for this quarter. So, that's something we'll stay focused on.
Yeah, but your European clients have started demanding any MiFID-related compliance? Or not yet?
Yeah, of course. So that's a, conversation which certainly, goes on, and we are responding to it. Okay. Both in terms of, how others, are, looking at rate cards and things like that. Mm-hmm. Also, like I said, providing liquidity is also very important.
Very important, absolutely.
And the fact that, we are building capabilities to do large-size blocks, and have delivered on some of these in the course of even this quarter, I think that helps our business.
Okay, great. Thank you so much, ma'am. Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Kamal Verma from CLSA. Please go ahead.
Good evening, ma'am. Ma'am, just a couple of clarifications if you would provide. One, in your initial remarks, you did discuss on the lending book, but could you clarify what is the size of the book right now and how is it YOY?
Yeah, so the size of our book has remained broadly, flat over, the last, quarter. In a sense, currently the book size that we have, is about 589 crores, our exit book. However, if you look at the fact that, last quarter, what was the average book size last year, same quarter, it was about 583 crores. Compared to that, it's around 619 average book size for this quarter. So, as you'll well be aware, frankly, this book, as there is interest in the market, the book also responds. So I would say that, currently we've seen a 7% YOY, and opportunistically, of course, we would continue to grow this book.
Sure. And, on the page 12 of your presentation, there is this discussion on this current asset decline. Is it primarily because of lower trading volumes and lower float you have to keep, or is there something more?
It is primarily on account of the decline in volumes, or it pertains to the last 2 days transaction, and therefore the decline is primarily on account of that in current asset. However, on that's primarily on account of that.
On account of the lower float?
So, if you look at our total cash and cash equivalent, that has declined marginally from about 15.4 billion to about 15 billion between March and June. And in terms of short-term loans and advances, which is what we were discussing just some time back, there is a decline of about 700 million.
So, 700 million, okay, I'll take it later. And the borrowings increased marginally, it's okay. And just wanted to clarify this, on the life insurance fee part, you mentioned that the fees are up quite a lot, right, vis-a-vis the premium originated. I had the number that life insurance fees is up 6%, but the new premium origination is up 6%, but the total fees is up some 30%. Is that right?
Yeah. So what has happened is that in the life insurance business, there was a change in the commission rates last year. So for the first 2 years, the commission rates were slightly lower, which have gone up because there was a regulatory change in the life insurance industry, which kind of brought down some of the restrictions on the marketing fee and other income that we earn. As a result of that, you would see this impact in Q1. We believe that over the next 3 quarters, it will normalize. However, in life insurance, what also happens is as the mix gradually changes towards the longer-term renewal book, the flow is relatively more sticky. But the reason for increase in income by 30% is primarily that.
And can you clarify what proportion of your distribution fees, both mutual fund and life, are trail and what proportion is new? Just ballpark numbers?
So it will be a majority which will be trail, both in mutual fund fee, because what happens is that upfront fee kind of was restricted about 2 to 3 years back. So after that, current composition is largely or majority is trail.
Sure. Last thing, in this P&L, what's this other comprehensive income and why is it down 41%?
So, actually from April 1, 2018, we have moved to Ind AS. And what Ind AS requires is that if there are any gains and losses which are accruing on account of actuarial valuation changes or mark-to-market of planned assets, they have to be reflected in other comprehensive income, which is an element of statement of equity. So it is reflected as a line item after profit after tax. On a like-to-like basis, the number which would be there in Indian GAAP. So earlier in Indian GAAP, the mark-to-market changes in actuarial gains used to be routed through P&L, which is now separated into OCI. That's why we've given a comparison of profit after tax growth, which is at 13%, whereas the total comprehensive income, which now includes the impact of this, is up by 14%. And the reason for the variance between the two is nothing but actuarial gains and losses between these two periods.
Got it. Thank you so much, Arvinder. Thank you, ma'am.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Madhukar Ladda from HDFC. Please go ahead.
Good evening, everyone. My first question on the retail broking side, can you roughly tell us how much is the brokerage coming from cash and how much is it from derivatives?
I think here, broadly we can be guided by industry numbers, and I think the directionality of how the industry has moved, one can kind of also use that directionality in relation to us.
Okay.
So, Madhukar, if you look at the industry volumes, roughly half and half is the revenue split. It is estimated between cash and derivatives. And for us, it could be slightly more tilted towards cash, but not very different.
Okay. And in your opening remarks, you had mentioned that derivatives share in ADTO went up from 92.8% in 1Q FY18 to 94 point something, I guess. Can you just repeat that number?
Yeah, so it's 94.8%. This is what has happened in the market in the derivative space. So it used to be about 93% last year, same quarter. And now it has moved to 95%. The point that Shilpa was making was that there is a shift towards derivative volume which is happening in the market. And we have seen our mix slightly move towards derivative as well.
Got it. And in your presentation, I also see a line which says market delivery turnover contribution to equity. Turnover decreased from 32% to 28%. Now, this would be, assuming 94.8, so the 5.2%. So this is like 28%. Delivery turnover is 28% of the 5.2%, basically, which is left over, right?
These are market numbers, so you're absolutely right. I guess that's how the market is really.
No, the derivatives number, was that for the market or was that for you? I thought it was for you.
This is for the market. So what we are trying to say...
Okay. I understood. And you are all in line with that, basically.
In the market also, there is a shift from...
Got it. I think, I got disconnected in between. I think you mentioned the size of your lending book or the margin funding book. So what was that size?
So, exit, our lending book is 589 crores. Average is about 620 crores. This is for Q1 19.
Okay.
On an average, it is up 6% from last year same quarter, which was at 583 crores.
Got it. And the yield on this average has been about?
If you look at the rack rate that we offer is roughly about 18%, and average would be slightly lower than that. And actually, the source of funding is commercial paper borrowing, so roughly about 7 to 8% over there.
So you get that spread, basically.
Yeah, so that is the spread. So it's a healthy spread over there.
Right. And finally, on the mutual fund side, I mean, the performance looks pretty good. especially in the face of direct schemes gaining traction, or direct investing kind of gaining traction. So can you kind of share with us what your view is and whether you are seeing any churn as a result of that?
No, I think, if you broadly see the industry, I think right now, while direct mutual funds have grown very well and outgrown, in fact, the general market movement in mutual funds, I think the way we see it is it's still a growing distribution market. And I think the fact that currently the number of mutual fund customers is still, so low. So I think the opportunity as a distribution company to keep growing, customers, to also take mutual funds to existing customers of ours, I think that opportunity is still there, and that is still something they're focused on. I think the whole acceptance of mutual fund as an investment product is a very positive development. I think the way, all of us in distribution have worked towards making an SIP a very meaningful kind of investment tool, I think that has worked in our, favor. And I think it's really a combination of these things. And like I said, the lead indicator is really the number of SIPs that we run. So I think MF Direct is an important, area of, I would say, competition. But would that result in, a lot of churn into that? I think not really. And I would also add that one of the things we bring to the table is really, a lot of information for customers to make their choices. And I think that is also valued, by a number of customers who work with us.
Right. And can you give me some color on the granularity of this mutual fund AUM? So how many folios make up the 348 billion? What is the average size of the customer and the concentration?
We've not really put that out. However, I can, tell you that largely, the way ICICI Direct works is it does work with, number of customers, and I would say in the, whole mass affluent space. So therefore, the average ticket size would actually not be very high. Mm-hmm. It would be fairly granular across our customer base.
Right. Thanks a lot, and I'll come and see you guys sometime. Thank you.
Yeah, thanks, Mashur.
Thank you. Participants, to ask a question, please press star, then 1. Participants who wish to ask a question, please press star, then 1. Participants who wish to ask a question, you may press star, then 1 on your telephone keypad. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you. I think it's quite late in the night, India time. So thanks to everybody who was on the call. And I guess we look forward to a continued dialogue. Thank you and good night.